Welcome to PC24 RETV. As usual, we'll start the program by wishing every one of those who are celebrating their birthdays, their anniversaries, their house purchases. They closed yesterday or today. Many, many congratulations to you from PC24 and Paul Cheema. I hope you are enjoying your life and may you keep enjoying your life. Today's broadcast is a special broadcast. We have some amazing professionals in the field of real estate and mortgage industry. And I hope this will be highly informational session whenever you watch it. This program will never go old. The information will always be relevant. Like every day, we talk about a quote before we start the program. And today's quote came from this amazing woman. Her name is Maya Angelou. So Maya Angelou, if you Google her up on Wikipedia, she's no longer with us. She was 86 years old when she left this world. But she gave a quote or her thoughts about anger. For the past few days, as you're aware, I have been sharing quotes on anger because this is what screws us most. Anger is not a good thing, and we need to understand the damages it causes to you first before it causes damage to a third person. So here is the quote that was given to us by Maya Angelou. She said, bitterness.
Oh my goodness.
Yeah.
You did
it. So by doing this video with so many guests, I have definitely overloaded my GPU, which is already 12 gigabyte and the latest model with NVIDIA. How are you guys?
Excellent.
Very good, thank you.
So, well, this program is only meant to share information and the right information. A few days back, not few days back, just I think 3 days back, everyone was talking about a news that appeared in the media. I think, Andrew, you might have read that Bank of Canada will end its interest rate cycle increase in September meeting.
I'm sorry, Paul, I could barely hear you.
Oh. Can Sheila and Tony hear me well?
You could speak a little louder.
Sorry, I was not clear.
I can hear you.
Okay.
Sound great to me.
All right. Is it okay now, Andrew?
Andrew? It's better, thank you.
Yeah, you don't have to agree to them. That's fine. With different systems. And sometime when I see that red flash icon saying GPU overload, I think it's then the audio becomes garbled.
Oh, okay.
We'll try to make it worthwhile. So what I was saying, a few days back, a news item was seen in online and offline media that Bank of Canada will end its rate cycle increase in September meeting. And everybody went crazy about that. They were sharing this news on TikTok, on social media, telling people to go buy a house today before they go up in value. I was just trying to pick your brain if you saw that.
I did see that, and to be absolutely honest with you, and I think the realtors in our group can concur. If we had a crystal ball on exactly when the fall or the bottom of the market would be, or when the upturn would be, then we all would be millionaires and wouldn't need to be on this show. But you know, where the actual bottom is going to be and when the market is going to turn is, I think, anybody's best guess right now. If I had to speculate on how I see and what I see going on in the market, just from myself, working with a private lender, is I think we are looking at a slower fall and winter with an increase in the spring and the spring market when other markets are coming back to life, so to speak. But really, to be honest with you, it's pretty much anybody's guess right now.
Yes, I agree. So this has basically driven everything crazy. Oh, I think I'm doing something wrong here, and John Cooper has taken my space. I'm talking, but you are.
John's a
hearing, you're
good-looking
seeing.
guy. It's all good.
I need to move him to the right spot. This is what happens when you're handling so many things at one point, guys. But the funny thing is, there's a lot of fun here. Here we go. I have John on the right spot. Hey, John, well, thank you for joining. So, Andrew, that's pretty right. If we have a crystal ball, we all should be millionaires and won't be on this show. Agree with that. But what I want to say is, nobody read the news item in detail. It clearly said there are assumptions to that, but because the article had to be purchased, people just went by the headline. Thank you very much. And
Absolutely.
well,
Absolutely.
how is the market going on, guys? Hey, John, how is market going on for you?
You talking to me, Paul?
Yes.
The market here in Nanaimo is pretty good relative to what I'm hearing happening in the rest of Canada, or at least the headlines that we're getting. Our market is cool, but it's not crashing. We haven't even really seen any downward pressure on pricing in the reported statistics, although I do expect this month's statistics to potentially show a decline in average sale price, but that still remains to be seen. Trading volume's down, listing inventory is up, and prices are holding. That's the story so far in Nanaimo, and I'm talking about the Nanaimo region, Parksville, Qualicum Beach, Cowichan Valley area as my market.
Yeah, well, I think I should have introduced you all before starting the program, but I got stuck in
It's okay.
fixing Tony's fault. It's all Tony's fault. Well, John, as he's from Nanaimo, Andrew Cooper is with a private lender, CMI, Canadian Mortgage Inc., a fantastic lender. I work with them a lot. Sheila McLuxy is a very successful realtor in Ottawa. And then Ray has not joined us, but he owns a couple offices in British Columbia, which are Remax Little Oak Realty. And then this handsome guy, Tony Joe, is the most elaborate person in our circle. Which is, he jumps on the hoods of the car. He comes from Victoria, BC.
No, Paul, I just jump on the hood of your car. You have nice hood.
Well, you can.
Thank you.
So well, that's good to know that your market is cooling off and inventory is going up, which I think will be true for many areas Canada-wide. Isn't it something more like seasonal as well?
Well, we're seeing that in Ottawa. This is sort of typical for us at this time of year. We're a very different market than the rest of Canada. We get massive amounts of RCMP, military, transfers in the spring, and some again will come in the fall. So we have, very cyclical, our highs and lows in our market. And we're in a very typical summer market for us right now. So things have slowed down. and the prices have stayed high, but we're not getting the same number of multiple offers. We are still getting some multiple offers in the lower end, for the first-time buyers, that section. For many people who are moving here to relocate to Ottawa for work, it's a very expensive market if you're coming here from other places. So that's why that tends to drive the lower end of our market. And still, you're going to be paying mid-sixes, mid-sevens for a townhouse, and you still may be in some competition. So it's not completely flattened out. The higher end homes have flattened out here, for sure.
Oh, okay, good to know. So your market is mainly driven by RCMP or the
Military.
mid 600,
We have-
mid 700 housing segment.
Yeah, we have the national NDHQ, the National Defense Headquarters is here, and we have bases here as well. So it is a very large presence in Ottawa of tens of thousands or more of jobs. So it's very big, and it's definitely, we see the cycles here. So for us to be quieter in July and August is normal.
That's good to know. And Tony, how is your market going on?
Good morning. So, of course, we're here in Victoria. As with most things, I'm going to say we've downgraded from white hot down to hot. So, as much as the numbers have changed, when we compare to the times before the pandemic, we would still rate this as being a pretty good market. Our sales numbers are down. The thing that we've noticed, that I'm sure you guys have as well too, is there's a lot of people away right now. It's either the agents or the mortgage brokers or the consumers. Now people can travel. It seems like maybe real estate's taking second place in their lives right now. So there's a chance that when things start, the school season starts and everything, things might start picking up again. We're far from a buyer's market, by the way. Although our sales were down 38% from July 2021, and our inventory level is up quite a bit. Our inventory level is up something like 70%. But that's only because we had nothing last year. So our inventory level right now, up 70%, but still the fourth lowest in our recorded history. So part of it is still very few things to choose from. We've been feeling that our sales numbers would be higher if there were more things to choose from, and our prices. I'm not going to say they haven't gone down. They have definitely stopped the upwards trajectory. We are still seeing multiple offers and bidding wars on the right properties. We are now seeing properties that are sitting around for a little bit where sellers are becoming a little more motivated. But as far as numbers are concerned, Sheila, speaking about townhouses in Victoria, it's a $900,000 to try to get into a townhouse. Yeah. Our single-family detached for the Victoria core region right now is about $1.2 million, which brings us back to where we were at this time last year. So we hit a peak in average price. About 1.45. So we've gone from 1.45 down to. Other than that, everyone's happy here because people come to Victoria, and that's the biggest driver. We are a military base. We're the provincial government. We're a technology center. We're lifestyle tourism. We're retirement. People come for the weather. Every week we're talking to several people that are relocating from other parts of the country because they had planned to do so at some point, but the pandemic accelerated that for a lot of people. So it's been a very interesting time. The problem that we have here is geographically we are constrained by, because we're an island. We got water on three sides. We have no way to go out So we're growing upwards, and we're becoming a very dense town. I think about when I started in 1991, selling 30 years ago. The population here was 220,000, and now we're 410. In a town that I grew up in, and we complain about more cars and bicycle lanes and all that kind of stuff. But of course there is, because there's a lot more people here. So
Yes,
so that's what's
economy
going
has added
on.
up too.
Yeah.
We need more people for
And,
a good
and
economy.
Nanaimo is only 75 minutes away from all that beauty,
You're just up the street. Yes.
just up the street.
Yeah.
And you keep a quarter
Andrew,
mil.
Wait, hold on.
keep a quarter mil in your
70,
bank account.
75 minutes? How do you drive, man? It's like a
Very
2-hour
fast.
drive for most. Yeah, apparently.
And I live on the south side of town.
Oh, yeah. Okay.
so I would like to ask Andrew, private mortgage industry. So Andrew, what are you seeing these days, the borrower behavior?
We're getting a lot of last minute file, but also at this time we're getting files normally up in B or A files that are coming across our desk that are being declined on the A or the B side for a myriad of reasons. Where clients and the realtors in the group can probably attest to this, where, maybe at one time the advice was, hey, buy a house, then sell yours because yours is going to sell right away. And then their home is not selling as quickly. So a lot of clients are being forced to be landlords or forced to continue owning their homes or owning two homes until their other house sells. That's a lot of the files that we're seeing on our desk right now, or where bank mom and dad is coming to the rescue, where the property has appraised for less than what the purchase price was. We're seeing a lot of that situation across our desk right now, which is awesome in our world as a private lender. We're never seen the volumes like we are right now. It's a double-edged sword. We only have staffing capability to fund so many files per day, and unfortunately, when a file comes across our desk, it's that's we would be able to fund. We have to push out the closing, so it's getting a lot of requests for extensions, things of this nature, which never was part of our business model or plan 6-8 months ago. It was hey, we'll fund everything within 2-3 days, and now we're funding 2-3 weeks minimal.
Andrew, does CMI help borrowers in jurisdictions such as Victoria or BC, Ottawa,
Absolutely.
or Nanaimo area?
Yeah, CMI is definitely CMI is licensed across Canada, with the exception of Saskatchewan and New Brunswick. So we're comfortable to lend in all areas, even in the smaller communities. The only lending restriction that we have in the smaller communities is we have a minimal equity position within the property. What I mean by that, so for example, if the purchase price is $300,000, we need a minimal equity of $100,000. So that means our max mortgage on that specific property would be $200,000. We're typically in sort of the larger price points, we're comfortable up to 80% loan to value. Where we're paying more attention now to, based on the market, is we're paying a lot of attention on the exit out. So how they're going to qualify through a B or an A or whatever the case may be on the exit out. What that means is we're paying a little bit more than what we used to do on the employment and the income to make sure that that out is actually a true exit out. Where in the past, basically if you had a heartbeat, we're comfortable to lend to you if there's enough equity because values are going up, where now we're paying a little bit more attention, and we're just, I don't want to say cherry picking, but we have the opportunity to sort of pick and choose a little bit more than what we did in the past.
I agree, because you have so many deals falling in place here, so definitely you can pick and choose at this point. But even then, my experience with CMI, and I'm not saying it to make you happy, has always been great. The pace at which those people respond back is phenomenal. I may delay.
I do appreciate that. Yeah, thank you. Thank you, Paul. We do try to pride ourselves on at least responding very quick. You submit a file. Our mandate is we want to respond back to you within 2 hours. Give you hey, we received a file. Thank you very much. Answer questions, whatever the case may be. Give you an offer within 4, and it's not a commitment. An offer is, hey, here's what we'd be comfortable with proceeding forward. You have an opportunity to talk to your client, and then sort of we work out the hammer out of the details from there, and then commit, within the next business day once we actually have the green light from you, the broker, to proceed forward.
Yeah, good to know that. So I will ask this question to everyone side by side. We have heard about stress test. Stress test. Stress test. Is not a good
Stress
name,
test.
Stress test. So do you think the stress test should go away now? Bank of England has scrapped a stress test. What do you think, John?
You know what? Over the last 10 years, I've been a fan of the prevent a lot of Canada going through a lot of what the U.S. has gone through. I look at it as a way to help stabilize our overall housing economy, and I think anything that's going to stabilize our real estate economy is a good measure. I do recognize that it makes it a little challenging for those entering the market for the first time. Especially in a market like ours, which is, some of the becoming some of the least affordable in Canada. So, anything that's going to add to the stability of our overall economy, though, I'm going to support as long as there's programs available to at least help those that want to get into the market to do so.
Mm-hmm. So BC also has the same 5% down payment plan for houses under $500,000.
Basically, yep.
One of the funny things about some of those regulations is, when price limits are implemented, it often cuts out much of the province of BC. So, the first time home buyer programs and stuff. I mean, you can't buy anything for $750.
Nothing.
Yeah, brand new.
$5,000. Absolutely.
Yeah.
So Sheila, how do you think this stress test is restricting your buyers from buying a house?
Well, for some on the lower end of the market, because we do have some, but we're getting into that's condominium territory. Like you're not buying detached for that kind of money. So it's affecting first-time buyers. It's not necessarily young buyers. It could be people who are new Canadians. That it's going to limit their buying power, and they're probably getting something smaller. Nothing, maybe not quite ideal to what they want, but they want to get their foot in the market. So the stress test has limited some people. Like that $500,000 can be a big break between, say, a high-rise condo and a townhouse condo. So, I would like to see it a little bit less restrictive, just because of our market here. I know BC, it's a whole different, southern BC, I don't know about northern BC, and the GTA, I mean, it's irrelevant to those markets because they're that much higher. But I would like to see just a little, a little bit less. And I guess here, the vast majority of deals, people are considered, A or plus because they work for the government. They've got the regular paychecks. Very financially secure here. We have a very different market than the rest of Canada. And it just seems a little bit too onerous for some buyers. And I'd like to see it just a little.
I agree, but stress test, I personally think it should be done with. We don't need stress test because now the interest rates are going up, and the stress test has also gone up. Stress test has also gone up. Like it is 2% on top of. It's already 3.8, 4.45. Add 2% to that, it takes it beyond comprehensible levels. I think it is time. We'll take Andrew's take about this later, but I want to go to Tony first. Tony, what do you think about stress test?
Rather strangely, I think it's actually been a good thing. And when it was implemented, of course, nobody knew what was going to happen in the marketplace, or what was going to happen globally. And as it turns out, when you look back, it has ended up actually protecting a lot of consumers. As I was saying, of course, what's happened now is it's just changed people. It's moved them down a rung or two of the housing ladder. So whereas they could have afforded that house before, they've got to move to a semi-detached. Those move down to townhouse, down to condo. So it's changing what they're buying. And if anything, the problem is it's added a lot of pressure in the lower end.
I'm getting feedback of somebody's speaker.
Some of us, yeah.
Yeah. So
perhaps we should mute when we're not on there.
I have no idea, but it's working fine, more or less.
Yeah. Anyways, what I was saying is it has heated up the lower end market. So our condos, especially the sizable ones, the ones which are being bought as a alternative to a townhouse or a house, people are still buying though. People still need to buy. We are definitely not driven by the first-time home buyers here in Greater Victoria. Most people have built equity from some other place, or they're coming here with money. Of course, the stress test does affect anyone who is financing or refinancing right now. But the difference is coming with equity, right? Which people do. But like I said, I feel that ultimately it was a good thing. Should it go away? I'm not sure, but at the very least, get modified, right? It should be a little more difficult to get a mortgage because if it's not, then we'd be looking like the United States. Back in the subprime crisis, right? So let's stay away from that. Yeah.
Absolutely. Well, the stress test used to be, because at that time it was implemented somewhere in 2016, 2017, the rates were so low. And the philosophy wanted to make sure that people do not exceed their expectations and keep buying bigger homes, that when the rates go up, they would be unable to afford the house. That was a very right thinking. They put a cap on people's ability to get mortgage amount. Great. Then it was 525%. It actually went through phases. It was less first, then it was increased, I think once or twice. But now it is 525 or 200 basis points on top of your contract rate, which is kind of killing many deals because people can't qualify. So two things in my opinion, and of course it may be different from your opinion too. Two things are killing the deals: high qualifying rate, and the second is low appraisals. So in one of my deals that we are trying to wiggle around, appraisal came $200,000 below the offer price within 3 months. And now we are stuck about how to close this deal. Buyer does not have $200,000. And he already arranged first mortgage through some of his own private individual lender. And he refused to pay. We are seeing that. So these two things are killing the deals. But let's take Andrew's take about that. Because Andrew is benefited because CMA is getting more deals as they are being refused by A or B lenders because they will stress test people. And they are all welcome as private lender. Andrew, you want stress test to stay or go away?
Well, to be my personal opinion, I think you're absolutely right, Tony. I think the stress test was a good thing to implement when interest rates were low, because we got to account for when they do come back up, and we all knew that they were coming back up. Right now, with the stress test at the rate that it is, I do think it's a little bit high. But backtrack a little bit, I feel that Mint is targeting the wrong debt. So, for example, they're targeting. Yes. Mortgage debt is, the big animal in the room, and it sells papers and it sells, media, things of this nature. But I think they should also be targeting, unsecured debt in the same way targeting the mortgage debt and creating a qualifying guideline for the unsecured debt. Let me just give you an example. I have a good buddy of mine who sells cars. And my wife was she's a mortgage broker. My wife was doing his mortgage broker, and over a beer, he was complaining to me about all the hoops and hurdles that he has to jump through in order to get a mortgage. And then in the same breath, he said he had a gentleman walk into his dealership, buy a $150,000 Corvette, and drove it home in 20 minutes. The fact that he was able to get basically $150,000 loan and drive and certified and out the door in 20 minutes, that is why we have the issues with the mortgages. It's, how can he have a $2,000 car payment when there was no income verification? Basically, you got good credit and you're off to the races. I'm sure you guys, when you're talking to your mortgage brokers and my client makes, 100,000 plus a year, we should be able to qualify, for a $500,000 mortgage. Household income is 200. They're, easy to $1 million. Then you look at their GDS, TDS, and now we're back down to $600,000, right? Like so it's education on the unsecured debt, which I think needs to be addressed just as heavily and just as regulated as we have with the secured debt. So the short answer to your question, Paul, qualifying interest rate, absolutely 100%, but it should be across the board, in my opinion, across the board, and qualifying for the unsecured as well as the secured debt.
Yeah, I agree. That's a good explanation. I totally get it. These days people are spending about 44%, or maybe close to 50% towards their mortgage payments. It is not 33% that used to be maybe in the first or second quarters last year, but now it has gone way higher. And how are they going to eat? The grocery inflation is already touching 10% or more. And they talk about the CPI coming down to 7.6% in July. But it is only, I think, mainly driven by gas prices, which is a data that is available everywhere. You can look at the data. But grocery, nobody is checking that. And I read a report where they said corporations made 10% more profit during pandemic than they used to make before. So the whole inflation pressure is being passed on to like individual households. Like they are the bearer of this load all the time, which is so unequal.
Absolutely. Agreed with you 100%. Just on the flip side, like for example, during the pandemic, I changed my furnace from oil to propane thinking that I was going to save. Lo and behold, propane went up 150%. I'm paying more now. It's the outside costs that are coming in, that are coming down to the end user, is unforeseen. That's really making the end user difficult.
Yeah, so 44% payment for mortgage, and then 10% more for grocery bills. People don't have that kind of money. And they're struggling how to cope up with the new reality. Like, I think that's the reason we are seeing more and more crime and those vehicle theft happening all across Canada now.
It's also an interesting stat, Paul, which I'm not sure if you're aware of it. During the pandemic, the amount of people that filed bankruptcy and consumer proposal actually dropped because of the government bailout programs. But within the last, I think it's 3 months, that number has tripled because of the bailouts not there anymore. So everybody's kind of their bills in the middle, and they're like, oh shit, I don't have enough. Sorry, I didn't mean to swear. I don't have enough money to pay the bills, and here's my solution in getting out. So the bankruptcy and mortgage rates within the last couple or stats of the amount of people that are doing it have just skyrocketed and gone through the roof. I think the worst is yet to come, so to speak.
Yeah, that's the
Doesn't this kind of introduce? Sorry, I just wanted to. I feel like this whole concept, because we've been, Tony Joe in his market probably had to wake up to this affordability issue many years ago. I moved to Nanaimo from Lower Mainland 15 years ago to get out of the lack of affordability. But I feel like there's a national conversation that's happening. It's certainly happening in my community, really around expectations around home ownership. I think Canadians have been in a very privileged position over the last 4 decades to wherein, I've got first-time home buyers' expectation that they're going to have a 3-bedroom, 2-bathroom home with a white picket fence and an ocean view as their first home. And I think, Canadians for the last 4 decades have been able to enter the real estate market at a very high level. But internationally, most people's first home, if they're lucky enough to get into ownership, is a very modest apartment. Maybe they're going to live in there with their whole family for a few years before they get to the next stage and upgrade to the home. So I think that the traditional, rent, buy a house, live happily ever after has just had a couple steps added. It's rent, buy a very modest living situations, upgrade slowly to get, so it might take 10 years to get to the point where you have the type of living arrangement that you grew up in. But that Canadians are finally having to really face this pressure of an increasing global population and some constraints on our national resources. So I'm spending a lot of time talking to people less about what's going on with the money, but more about their expectations around where that how they're going to enter the home market and shifting their mindset and their strategy around how they're going to get into the market. Because if they're waiting for money to get cheaper or prices to come down, in my experience, they're going to be waiting for another 30 years.
Yeah.
Agreed.
Yeah. That's one of the things that's one of the things that I've been having to have conversations with first-time buyers, new Canadians that are coming in, of expectations of where you're going to live. The first thing I say, it's going to be budget driven. That's number one. So yeah, that single detached home may be out of their price range for a few years, but I always have to tell them, you'll have a 3 to 5 year plan. So then this is your first step, second step, what have you. And I think some people will just have to lower their expectations that they're not going into that large detached home with a 2-car garage right off the get-go. When you're, 24 years old, you've got your first job in the government here, you're making, $85,000, you think you're doing really well, but, you're just not going to be able to afford, like you'd have to move much further away. You'd have to go to North Bay or Barry's Bay or somewhere. Yeah, it's not going to happen in the Ottawa area. But I think a lot of it is for like so much of it, it's just going to be educating consumers.
Tony looks way different with his glasses on.
Yeah, Tony changed.
Now I see Ray and Canada.
Yeah, he looks so different with his glasses off.
Where
What did that happen? Where did you kick Tony, Joe? Tony, where is Tony?
Tony, I didn't know you and Ray were hanging out.
Yeah, Ray came here. Ray is using the link that was meant for Tony Joe, and I don't know how it happened.
I had trouble. I was on my phone. I was having trouble, so I finished my workout and I got home and managed to log in. It seems like I'm logged in.
Yeah, but you logged into Tony's camera.
Did I kick the great one out?
You did.
Oh my goodness.
How about his voice? Is his voice as well?
We suddenly lost Tony Joe.
It's a total takeover.
I mean, I'm not worthy of knocking Tony out. I mean, come on.
Yeah, you did knock Tony out. Yeah.
We're all scrambling right now.
Well, no problem. We'll get him back.
Tell me what you want me to do if you want me to do something. You want me to?
We need to fix this up.
Well, Sheila, couldn't agree with you more. I mean, that's a conversation we're having over and over here. And you know, areas like where I grew up had to have this conversation 20 years ago. Areas like where Tony has had this conversation 10 years ago. And there's a whole bunch of communities in Canada that are waking up to an average single family detached sale price that's north of $700,000. And as soon as we get that average sale price north of $700,000, we knock out most of Canada in terms of their ability to afford a single family detached home. And, you know, I mean, that's a hard pill to swallow. You used to be able to buy, 6 years ago, you could have bought a home in Nanaimo for $365,000. That price lasted for 8 years. And in the last 4 years, it went from 365 to 875. So this community has had a major wake up call to pricing. And it's a conversation we're having every day about, unfortunately, we're looking at townhomes and condos, and that's okay. You know, one of the biggest challenges we have is the parents of these kids are talking them out. They're saying, don't buy a strata. You got to buy a house. You got to buy a house. And I'm going, that's horrible. You got to buy a house. And I'm going, that's horrible. Trying to save up enough money to buy your first home at $875,000 is going to take a lifetime.
Yeah, well, you guys carry on. I'm going to bring Tony on the line. Please be my moderator, some of them. He's confused.
John, I think it's
Tony.
John, I think it comes down to education. Education before they even start going out and shopping. For example, I just had a conversation with a client who was getting the mortgage, and they were complaining to me because their home value had dropped from when they purchased 6 months ago. They were complaining in the fact they're like, well, there's a shortfall in the mortgage now. Who's going to eat that? And I'm like, sorry, I'm not sure I follow the question. What do you mean, who's going to eat that? And they were like, well, the home value is not worth anymore. So, there's $70,000. Though I don't owe the bank $70,000 now. And I'm like, well, actually, you do. It just, but that pure education, the fact that they thought because their home value had dropped, now they're going to be dropping $70,000 off their mortgage, just the educational piece, I can't stress it enough, that the fact that just finance, educate credit, educate. I hate to say put it back into the school system, but something's missing down the pipe.
Absolutely. Things are totally differently acting these days. So we got Ray from Remax Little on Reality in BC. I guess most of you, except of course Andrew, know he is a leader. He has many offices in BC. So Ray, you missed a lot of conversation, but we are happy that you're still here. So my question to you is, where do you think the market is leading us?
Question. That's great. Okay. Brett, I believe you have the first question.
Is Ray here?
I'm here.
So
for
where
those
do
of
you
you that
think
don't
market
know,
will lead?
what's the question?
I was saying, I'm asking, where do you think the market will end up or lead to? On a short
Well, in our area, the market's already adjusted, and the kind of prices people were getting in January and February, they're not going to get that day. We were getting ridiculous prices, and in some parts of the market, it's probably going to, the higher end product homes, especially residential, will be hit the hardest because we were getting some absurd prices, and we're just not going to get them today. So if people are basing their listing price on what's sold in the last 3, 4, 5 months, hoping they're going to get that today, it's not going to happen. So there's that aspect of the market that we've had a price adjustment. We're probably going to still have some price adjustments because, we were getting insane prices. There's this people that were able to sell and take the profit and move to a smaller community or go to the Okanagan or something and, rebuy something else, even though the price was high. The gain in Vancouver, Fraser Valley was unbelievable. I just closed a deal a little while ago, a few weeks ago, and the seller was giving me a little bit of trouble. I was my listing, and the seller was giving me a little bit of trouble, and I'm saying to him, look, don't give the buyers any trouble over a $5,000 holdback for some cleanup, because we sold this property. We listed it at 2.9 mil, sold it for 3.55. And I think you're worried about $5,000. If I sell this property again today, I'm not going to break $3 million. So we've got like $550,000 of money that you just need to take it and run. You bought a place on the island, and take the money and run, and just like thank the Lord that it, if we get the 5,000 holdback sorted out, great. But don't worry about it. I'll sort it out. But in the everyday home that the majority of sales are, like say townhouses and condos, the prices were also up, not as crazy as what I just described on it. That was a development piece of property. It was an older house. They tore it down, built five. They're going to build 5 houses. But on the everyday things that people buy and live in, townhouses, condos, small single-family homes, the market slowed primarily because money is harder to come by, obviously, and sellers, it takes good realtors. See, here's the problem. We got a lot of people with real estate licenses, but do they have the skills to explain to a seller what's happened in the marketplace and how that's reflected in what people are going to pay today? So, fact of the matter is, you and I both know that there's always a small handful of people that have those skills, that have developed those skills. The majority of them they know how to fill in forms. They're order
They know how to
takers.
make a good Instagram post.
Exactly. Well, they fill the forms in. They can make an Instagram post, but can you go back week after week and say it's not working at this price? And well, Ray, what are you doing? Listen, I'll tell you what, I'm doing a lot of stuff, but it's not what I'm doing, it's what you're doing.
Or can you problem solve when it falls outside of the template?
Exactly. Yes. Exactly. So it's a great, years ago, one of my buddies in North Van, Peter Carlington, I think, he's no longer in the business, but Peter, we had a busy market once. He said, I hate this market. He said, my grandma could get her license and sell real estate. He said, I like it when the market's a little tougher. He says, then you got to be skillful. You got to know your stuff. You got to know what you're doing. So that's
it's a skill game. It's a skill game, not a right place, right time game.
Exactly. Yeah. So our market's going to be, our sales will be down this year, the end of the year. But we're coming off the best year ever. So how do you come off the best year ever, unless you're Tony Joe?
I got Tony Joe.
Hey, Tony.
Unless
you kicked him out, but we still got him back.
Out of the hat,
Well,
but in the Fraser Valley,
interesting. I'm very happy with this conversation going on. Sorry, I was trying to bring him back, and
I don't know what happened. I left you for a minute there.
Yeah.
It was a Ray takeover.
Oh, Ray bumped me, did he?
Yeah,
it's a hostile takeover.
Camera. So the screen flashed, and then I said Tony Joe, but it was Ray's face. Yeah. It was hilarious.
I hope you took a screen capture because that's invasion of the body snatchers, Ray.
It's all on you.
So let me ask the same question that I just asked, and Ray gave a very befitting reply. John, where do you think the market is going to go to?
I'll speak to the Nanaimo market. We're very lucky here in that we have a lot of domestic demand. So Canadians want to move to our area and can still afford to move to our area. We're the best, some of the best. We're still some of the best, most affordable weather in Canada, despite it becoming increasingly less affordable. So, I don't see the supply side of this equation getting addressed with a ton of new product coming on. We have the same constraints as Tony with, we're surrounded by rivers, lakes, mountains, and ocean. We can only build where we can build. We don't have an infinite supply of land. We certainly have more land right now than Victoria does. We have a lot of infill. We're only 100,000 people here in greater Nanaimo area. So lots of room to grow. So, supply side not being addressed, demand side, I think, is going to stay relatively stable. I think our market is going to be the slow and steady market that Nanaimo's been for the last 4 decades. We typically look at about 3 to 6 annual appreciation. I feel like that's sustainable appreciation that could last indefinitely. So next 2 years, downward pressure on pricing, very subtle, with a recovery back to our slow and steady tortoise pace of 3 to 6 annual growth. That's my hope, and that's where I'm putting my money at present.
Well, that's great to hear. If you are having a steady market for last 3-4 decades, I don't think it's going to have any effect on the housing market there. It's kind of going at a level, straight line. Yeah.
Yeah,
So Sheila,
and just overall, just a big national. Yeah, go ahead.
Yeah.
Sheila, what do you think where the market is leading to in your area?
Well, as I'm saying, we are a very different market than the rest of Canada. We always have been. It's always a slow and steady pace here. I mean, certainly last year, I'd actually say 2.5 years or 3 years, even before the pandemic, we've seen a sharp increase of the number of people coming in from the GTA, since the GTA is unaffordable for so many people, and so many people can work remotely. So this has actually been going on longer than the pandemic, where we've had sharp increases in prices and lots of multiple offers and whatnot. But we are going, I think, back to our more normal market, which is going to be slow and steady. We don't have the big dips and valleys. We don't have like the Vancouver market. Hi. And we don't have like the GTA market, because we have, this major steady employment here, and we're over 1 million people in this area. And what I find with the Ottawa market, it's very much area driven, because, we are a fair sized city. We're one of the biggest cities in Canada. That it's, what can happen in one particular market where they're going to see 10% increases every year because they're in the hot little, hot section of the city, compared to the suburbs. And it's funny, during the pandemic, the suburbs, and specifically Canada, saw the craziest increases. As opposed to the downtown Westboroughs and Sandy Hills and what have you. But we're just going to see that slow and steady still again. And, longer days on the market, which is going to be a lot easier for buyers because they can actually see things. If it's something 30 to 60 days on the market. I know some rural areas that, we're not dealing with, I guess, people here that are in the serious rural areas where 90 days may be a normal day on market for them. But it's going to go down from it's going to be a lot different than the 3 days on market, 4 days on market. Mm-hmm. And so I think it's going to be better for the buyers for sure. And the prices are still going to stay up there for the sellers, which is nice. But they may not have someone coming in and throwing all that money in and some of the houses like they had been doing in, say, January, February, and early March. So I think we're going back to a more balanced market in this area. And because we do deal with so many people coming in every year for their careers, it's a little bit different. We don't have that retirement market, say, that Nanaimo has or Victoria has, but people do retire here. They stay here. They've got their big government, and it's reflected housing types here as well. So that'll reflect on our construction and what's being built now. And so we're I think we'll be okay. I just think that some sellers will have to temper their expectations, that someone's not going to throw so much more money at their house like they did earlier on in the year. I think we're just going to go back to, our, say, 3 to 5% increases every year, where some people may have negative some years. We're always on that slow, steady trajectory.
Thank you very much, Sheila. Slow and steady trajectory is good, so means you are kind of unaffected with how the market is moving. Well, I will definitely take a quick take from our esteemed people like Tony and Andrew. I think then we should be able to wrap it up. we started a bit late, so we can end within 5 minutes, I guess. I know you guys are
Paul,
busy,
I've
so
got
let's
a
take over
host
to
guest.
Tony. Tony, how do you think about the market outlook in your neighborhood?
Okay. Well, first of all, I see that Ray over there. He's got a squatter in his house, and she's been on a paddleboard. So
That's
do
a
you
good
even know what it's
sign.
like standing on solid ground?
The Earth finally stopped moving yesterday afternoon. So yeah, and Okanagan Lake gave me everything.
Well, I will say nice hat.
Hey, well, hold on a second. It's not just that you were having fun. Tell us how much money you've raised.
So the plan is to raise $100,000 for Children's Miracle Network hospitals across all of North America, all 170 hospitals. All of the Toronto donations, some of you may be familiar with the Johnson Fund, which of course was started by the Johnson family after their daughter Ray. So yeah, so far we're at just over around 30,000 with another few thousand already committed. Donations can be done at www.paddleformiracles.com. And actually, I know a few of you are connected on my social. Coop, Sheila, Andrew, I think we're connected as well, correct? And
That's correct. Absolutely, yeah.
yeah, you can grab any of the information from both my personal and the Paddle for Miracles pages, both on Facebook and Instagram. But yeah, creating more awareness that the hospitals are in desperate need of more funding. And if you know anybody in the Okanagan area, the paddleboard that I rode for the journey is for sale. And whoever buys it, that money I'm going to direct to the BC Children's Hospital Foundation because it is a BC board. So the money will stay in the province for that one. Anyways, thanks for letting me cross your meeting.
Well, nice input. Nice input anyway. Thank you.
Nice work, Jennifer. Nice work. Hey, I hope Ray's a good cook. He's feeding you. Yeah.
He makes really great restaurants.
You think he's a restaurant.
Come on.
Yeah, exactly. So, Paul, the question was what's the outlook for our marketplace? Victoria is always busy, and this is the interesting thing because we're multifaceted. With all those things, government, lifestyle, retirement, all those things I mentioned before. We rarely have any sort of major peaks and troughs, right? People are generally moving here, for their own reasons. Plus the fact that we perpetually have an inventory shortage, and yeah, things here are expensive. The one thing that I want to bring up as an observation is there's been a lot of development sites for sale recently, which is an oddity. So we rarely see them on the market because developers just go ahead and they start building on them. It's pretty clear developers are feeling that they have a better chance of selling the site and making money now as opposed to taking the risk and building out over the course of the next couple of years. So maybe that tells us a little something. But we most definitely need much more new inventory. Housing starts here in the region are always really low. And I suppose just like the other municipalities, the amount of red tape and development time, I understand developers' standpoints. Like there's a lot of risk there, and there may not be a lot of money at the end of the day. I feel for those who sold. They had sold out developments just before the pandemic hit, and then they saw the values escalating. Had they waited a few months, their profit levels would have been up. 40%, 50%.
Well, that's with the builder, there is another ball game going on. So previous build houses like in 2017, 2018, that were closing in 22. Well, those were sold at a high cost. Builders, I think, reduce prices too going forward, even though the material cost has gone up.
Yeah. So yeah, no, Victoria continues what it is, and you know the biggest it's net migration. Net migration. Few people leave, a lot of people come in, and as long as there's a lot more people coming in, plus the fact that we cannot expand our borders here. Not like Calgary. We don't just expand the outlining areas and become a bigger city. We have no expansion space. So, affordability will always be a factor here. You know, John, you mentioned tortoise level 3 to 6%. That's not bad. You know, that's what it should be. Like, I think markets were never built for 12, 15, 20%, annual increase. Right? Is those who've only been keeping their eye on the market the last couple of years, they think that 3% is terrible. Right?
Yeah.
So I just jumped back in when Ray was talking about licensees and all that. I work for a coaching company here as well too, and the thing that we are noticing is licensees are not wanting to work. You know, we came off of 2 years of a strong marketplace where it was relatively easy. And, there's a different mindset out there now. And it's going to be interesting to see in our industry where that ends up. Because for me, I'm an instructor for anyone in British Columbia coming into the marketplace. And our provincial regulator, our caseloads, have tripled in the past year. So everyone's getting into the business because they've heard about how easy and simple it is. Right?
Thank you.
License to make money. Yeah.
Yeah, that's awesome.
Well, license to make money posted on Instagram.
I will go back to Andrew for the same question. Andrew, do you
Certainly,
have any input about where the market will head to in, let's say, 2 years from now?
Oh man, if I had a crystal ball. But where we see a lot of change happening right now, and you all have mentioned it, is I don't want to call it the entry-level home, but sort of the starter home. You know, we have essentially 4 markets going after that. First-time home buyers, people that, investors who are looking for an investment property, people that are downsizing and people that are being forced to downsize. So the entry level in whatever market that you're in really hasn't taken a hit. I don't foresee that. I think that's going to be the upward trajectory. It's the estate properties that we find that are really taking the hit. Sort of the really, the really glamorous types homes. Those are the ones that are taking a serious hit on the scale. Like Ray, you mentioned that you sold that property for 3.5, and then you'd be lucky to get over 3 if 6 months later. That type of scenario we're finding really drastic. But also, and that's why, as a lender, we're paying very, very close attention to what the appraisal reports are. The appraisal report was done, 45 days ago. Then we're going back to the appraiser and saying, "Hey, are you confirming that the value is still here on this property?" In a lot of scenarios, we're finding that the appraisers are not supporting their values that they gave, 45 days ago. That we are having to address a new valuation on the properties. So in 2 years' time, do I think we'll be out of this mess? Absolutely. But for right now, I think we're basically just going to have to ride out the storm. Personal opinion, I think it's a fantastic time to buy. Stuff's on sale, and you actually have a chance to look. Think about it before you buy, as opposed to walking into the home with an already in hand. So on the investor point, in my investor world, I'm thinking this is a fantastic opportunity. But, as sort of everyday market, I think it's, be very cautious and rely on, professionals such as yourselves and realtors to sort of guide anybody through the process and what they're doing.
Thank you very much, Andrew. Always great input. I see Ray and Kenna has changed shape again. What's going on here?
So,
This box is changing face is so quite
I'm
obvious.
just coming in. So so even though I'm on vacation.
She paddled in.
Yeah, I paddled in. Yeah. So, just an interesting insight that I've already seen with my agents in the east side of the GTA and actually even our Oakville offices. We're starting to see a lot more buyer activity, a lot more showings, and even on the product that's priced at or just marginally below market, we're starting to see multiples. So the buyer activity is really high right now, and I think that the media pushing out a lot of that information about the rates kind of stabilizing until at least the end of the year, the September 7th announcement. So we're definitely seeing a lot more activity out in our area for sure.
Awesome. Good to know.
Also,
So what I understand is things are more like balanced. If they're not balanced, it's not like so catastrophic for sellers too. So at this point, sellers are not stressed out. Of course, some are. I should change my statement because I know sellers have been like so crazily sad about how the market has changed over the year. But then they buy expensive, they sell expensive. They buy cheap, they sell cheap. The dynamics, the ratios are somehow going to stay more or less similar in all the market. But it's good to know that we all have an upward market, and winter is never a good time to buy. I understand it, but some people, they have to. Nothing can change it. Input there. So we call it a day.
Your internet.
Coffee. I think the coffee and thermos and the cups and
Oh, okay.
sugar and everything.
We're changing again.
Well, good talking, guys. I really appreciate you joining me, and I plan to keep doing such things off and on. It's a broader idea. Like, I never knew Nanaimo is consistently 3 to 4%, which is great, and a retirement area too. So I can go to John, say, "Hey, John, I'm coming here to settle down."
We look forward to having you.
Yeah, I will never move.
Get over here so I.
Cars, they make a lot of noise. Here, the guzzler cars. Tony, never in your neighborhood.
Get over here so I can jump on your hood.
Well, I will be taking this program off, and we can still talk if you have time. Thank you very much, John, Andrew, Sheila, Tony, and Ray, for joining this feed. I really appreciate your time. And we are nearing to our end of the program, and I hope you guys like this panel discussion. All these people are very accomplished people with a lot of experience on the table. So the consensus is market will more or less stay same. It's not going to change much, but you buy if you can. If you cannot, then nobody can help you. Everything in the mindset. Before I end the stream, I would like to sympathize with those people who have lost their family member. May that eternal soul rest in peace, and God give you strength to overcome this vacuum in your life. With that, we'll say thank you very much for watching this video, and I shall be back again tomorrow 10:30 to 11:30. We'll have another guest tomorrow from the mortgage industry. So stay tuned for more updates. Taking it offline. Bye-bye. Bye everyone. Thank you very much. We can see
Thank
you, Paul.